Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, the Reserve Bank kept interest rates on hold this month. For 2 years now, we've seen no change to rates. What would it take for the Reserve Bank to make a change?
The Reserve Bank has been very patient on interest rates, and their view is that the Australian economy still deserves support from the viewpoint of increasing employment and also generating economic growth that eventually leads to higher inflation. And given that view at the moment, it doesn't look likely that interest rates will rise until at the earliest next year in 2019. Now, for the Reserve Bank to sort of like accelerate that story, what we need to see is stronger economic growth, stronger employment, higher inflation. And at this stage, while we're making progress on those three fronts, it doesn't look likely that the economy is accelerating in such a way that would warrant higher interest rates.
Okay. So global share markets performed very well throughout the month of July, particularly the US, which was up over 3.5% for the month. Was that surprising to you, given the trade tensions?
Yes, it is surprising, but bearing in mind that the corporate profit story is still very positive, so corporate profits at plus 20% growth for the June quarter looks likely. And it is an environment where the American economy is growing quite solidly. So we saw 4% economic growth on an annual basis in the June quarter. Unemployment rate in America is below 4%. So the labour market is very strong. And with that, it's a healthy environment for the corporate sector. So Wall Street is reflecting that. Against that is the negative of this trade war between America, China and Europe. We had an interesting development in July in the sense that the tension between America and Europe lessened because there was a White House meeting between the President of the European Commission and President Trump, and they decided to have talks about this issue. But the concern still is between America and China, and both of them are announcing tariffs on imports from each other. And this conflict looks like it's going to continue for a while.
And what about the other story that's quite topical at the moment in terms of Brexit and how uncertain the outcome that is for what might occur? So what are the potential implications for markets?
Well, for Britain itself, it's a long-term negative force because we're now at the stage of looking at a very messy divorce of Britain from the European Union. The importance of the European Union to Britain is that it's a key trading partner, it's a source of investment for British industry, it's also a source of employment. So we have workers moving from Europe to Britain to fill short-term job opportunities. Now with this divorce, that's a downside risk to the British economy. But it's also a concern for Europe itself in a broader sense because Britain may be the first exit from the European Union, and we may get a sequence of exits from the European Union over the longer term. So we need to be conscious of the political risk in Europe.
Okay. And finally, Bob, how has the share market in Australia performed over the month of July?
Well, for July itself, we had a modest gain of plus 1.3%. So the Australian share market did reasonably well. There were a couple of key sectors that outperformed. Telecommunications were up plus 7.9%, and the industrials up over 3% for the month. Against that, utilities disappointed, the same with information technology, down about 1%. So the Australian share market was, all things considered, quite resilient, but obviously not as strong as Wall Street's performance.
Okay, thanks for your time, Bob. And thank you for joining us. If you'd like further information, it's available on the website where you launched this video.